Jerome Powell seeking approval from US senators for a second term running the central bank and addressing the most critical economic issue right now.
We know that high inflation exacts a toll, particularly for those less able to meet the higher costs of essentials like food, housing, and transportation.
Former President Donald Trump chose Powell to run the Federal Reserve, so current President Joe Biden's decision to nominate him for another 4 years is a bipartisan vote of confidence. But that might be the easy part.
In hindsight, Jerome Powell's first term must look like a breeze, stewarding a US economy in a period of maximum employment and with a stock market that couldn't stop setting records. Now, as well as a pandemic that won't go away, the Fed has to wrestle with a problem it hasn't had to worry about for years: soaring inflation.
When the economy crashed in COVID-19's first wave, the Fed saved it by slashing interest rates to near zero and pumping in hundreds of billions of dollars in stimulus. But having been praised for helping to bring employment back to pre-pandemic lows with these moves, Powell is now under fire for driving up the cost of expenses like gas prices by keeping monetary policy too loose for too long. So he needs to act.
We are strongly committed to achieving our statutory goals of maximum employment and price stability. We will use our tools to support the economy and a strong labor market and to prevent higher inflation from becoming entrenched.
That's a sign for some analysts that the Fed will raise its benchmark lending rate at least 4 times this year, much faster than it previously indicated. Higher rates should cool prices, but they also mean higher consumer borrowing costs.